Mehrbun Irani, let me bring you on board. This question is coming your way. The Cobra Post expose created quite a stir yesterday, but despite that expose, banking stocks they closed at the highest point of the day. Do you think the Cobra Post expose was a story and will no longer be a story going forward?
As far as the stock market goes, it may not be too much of a story, because if I can understand whatever I saw of the videos, is basically it's not going to have too much of an impact as such on the financials of the banks. True, if the expose turns out to be absolutely true, absolutely accurate, such type of things have happened, it may possibly impact the bank's future expansion plans with the RBI coming heavily on them. There could be a little bit higher provisioning here and there, but at the end of it all, I personally feel the claims made by those employees who have been shown in the videos that such type of things have been done in the past is, according to me, a much bigger crime. Now, if that can be substantiated, it could be a little bit of a problem here and there, but I think, I heard your question. The biggest concern, if any, in my mind is that at least 2 of the 3 names are supposed to be the most decent among the entire banking industry as far as India is concerned. So a little bit of dent, I would say, here and there. As far as the stocks reacting going up very sharply post the 2.5-3% reaction in the stock prices following the expose, was largely to do with the fact that the market started looking positively at the WPI numbers, despite being heavy, the core inflation having come down, and the rate cut on 19th is, according to me, now largely discounted by the market.
Mehrbun, Asian Paints, I know you own this one, you track this one with a magnifying glass. What is happening in Asian Paints? I mean, consumers are slowing down, auto sales are down, retail sales are down. Obviously, that will have an impact on the paint industry as well. As of now, markets are of the view that the paint industry is immune to the slowdown.
I think Nikunj's answer is very simple. It's the art of compounding. People who are owning it are not selling it. In fact, people who are owning it are going ahead and buying more. Because
are you buying more? You own it, right?
Yeah, we also buying more. We are using every decline. 4,800 now we are feeling stupid that we have not bought enough of it. If it kills me at 4,600 again, possibly.
At 4,600 you'll buy?
I'll tell you why.
At 4,600 it's a P of 30 times.
I will tell you why. Nikunj, even if I'm positive for the markets for 2014-15, there could be setbacks in 2013 year and there ahead of the elections. The fact is, what do I go and buy? Out of the 7,000 companies listed in the market, I don't have more than 30-40 names. I have to go and buy the same stock. It's nice for me to say that, okay, I have Asian Paints in my portfolio, but if it's going to be only 2.5-3%, and I don't have too many options, better go and buy 1% more of it. The fact is, it's the art of compounding, which is the only safe way in this market to possibly make money. Because trying to be adventurous, trying to look out for stocks which have come down very sharply with the intention that they may bounce back, things will improve, corporate earnings will recover, I think would be a little bit foolhardy in this present scenario. The time to buy into equities has come. I'm not saying no, but buy for the next 2 years. But the fact is, what do I buy? Go and buy the same IndusInd Bank, the same Sun Pharma, the same Lupin, the same Asian Paints, and use every fall in the market, hoping that the stocks also will retract a little bit and buy more. So I'm trying to say Asian Paints stock has gone up because raw material prices coming down somewhere. That's going to help in improve the margins. But at the end of it all, people who are owning it are not selling it. People who are owning it are thinking there are not too many things to buy in the market. Let's go and buy into Asian Paints. At least it's given me decent money in the past, and hopefully it will give me decent money in the future also, though there could be correction here and there.
Mehrbun, what about autos though? Slowdown concerns prevalent, but the pack would move if indeed the RBI were to cut rates. So do you think any positive trigger is also in the price?
I think the positive trigger is in the price. I think I would like to appreciate and stay the performance of this auto companies consistently, despite the slowdown which we have seen in the global economy and the Indian economy over the last few years, that they have done decently, fairly well. But now the scenario has come where they are facing the pressure, they are facing the brunt, I would use the word. I think when I have checked up with some of the auto ancillary companies in southern India and some of the auto companies also, I think the scenario is pretty bad on the ground and things are not going to improve in a hurry. Freebies, discounts being offered is not a great sign for the industry. Also in terms of valuations, they're not going very cheap. So I think in the auto pack, if I were to buy anything, I think I'll continue to remain invested in Tata Motors. We saw muted numbers coming from JLR. I heard all sorts of comments happening. What happened to the stock? So maybe with a downside risk of around 275, 280 for the stock, I would like to remain invested in Tata Motors, and maybe if you give me a 275, 280, I'll go and buy into it, because the February numbers, I think, were an aberration somewhere because of what happened in China. China had its New Year holidays. They will go back into the markets to buy things over the next 2 months. There's a plant coming up in China where their costs will come down by at least around 18 to 20%, maybe 2 years down the line. So all said and done, Tata Motors around 275, 280, I will look at it. And the two-wheelers, somewhere I will think of possibly buying into Bajaj Auto at around 1750, 1800 if it comes to that level as a decent opportunity with limited downside risk from that price and definitely an upside over the next 12 to 18 months.
Nalco, because the floor price for the OFS has been set at 40 rupees per share, which is at a discount of 9.6% to yesterday's closing price. Do you think it's an attractive price, and would it garner much interest?
Aisha, the question is on the shorter term, answer is no. I think all sorts of the prices of quite a few of these PSUs which are on offer right now look attractive, definitely yes. But we all know the technicalities of the market. We all know how the markets function. The stocks end up being under pressure for quite some time to come post the offer closing also. So at 40 rupees floor price, 42, 43, 44, whatever, I don't think the stock is going to go up in a hurry because of the overall scenario in the industry. But if you're asking me, an investor is asking me, do I use this as an opportunity to buy for the next 1 to 2 years? My answer would be yes, because maybe, let's be honest, about a year ago or 6 months ago, I had not thought that somebody will come and offer me an Nalco at 40. I think government has got its own compulsions right now. They have to raise their funds. Is it an opportunity in the short term? In short, answer is no. For the longer term, somewhere, the answer would be positive.
Mehrbun, the sector which I want to discuss at length with you is the entire oil and gas space. You know, when we started the year, Mehrbun, markets were not expecting any oil sector reforms. But 3 successive diesel, hikes are in place, and still stocks like HPCL and BPCL are languishing.
No, we had turned positive on the sector about at least 4 months ago. The reason was simple, that there were clear-cut talks that, okay, we are going to control fiscal deficit. To do it, you have to either improve your revenues, which cannot increase in a hurry because of the global scenario and because of the poor growth in this country. The second thing is cut expenditure. Where do you cut expenditure? It's going to be the oil and gas back. Subsidy is going to be targeted. It's going to be a very, very bold political decision just 15, 18 months ahead of the elections. But will the government do it? They did. They did. So far they have done it. A lot of skeptics are still saying that it's not going to happen because there are state elections coming. But the fact is they're continuing to do it. So I think this is a pack which you need to look at a little bit positively, because if 5.2 has to become 4.8, you can't let things happen the way it used to happen once upon a time and say, okay, fine, enough of oil price hikes right now. So I think this is going to continue. So maybe in the upstream companies, we continue to like Oil India and ONGC, but in the marketing companies, I think HPCL would be the greatest beneficiary because of higher marketing assets. But I think BPCL has got its own story. So between the two, BPCL has an edge over HPCL.
Okay, pardon my curiosity, I just noticed that the headline of the sheet you're carrying, it says, the best buy list. Why don't you look at the sheet and tell us your best buy ideas?
No, we are looking at the same company, the same boring companies, a lot of people say. I think in the oil and gas pack, we like Oil India and BPCL. In the pharma pack, we like Lupin. Sun Pharma has become a little bit expensive, but it's a stock which you need to continue to hold on to it. I think besides that, in the banking pack, we like IndusInd Bank as our best bet, along with HDFC Bank, despite what has happened yesterday, hoping that this will pass off. So maybe a decline could be used as a buying opportunity. We are liking the private banking space, Nikunj, only for the simple reason that while the public sector banks look very attractive in terms of valuation price to book, in my mind, at least, we may call me very conservative, very negative. I still have a big question mark as to what book are we talking about. If you look at the restructured assets of quite a few of these banks, it's nearly 7, 8, 10% of the total loan book. And that's dangerous, considering that 2016 is going to be the time when these restructured assets have to be converted into NPL. So are we looking at more and more provisioning going ahead? So while the price valuations are absolutely biased in favor of private sector banks, they would be looking expensive. But the fact is, in a scenario in which growth is not going to come in a hurry in this economy, while the government is working still on the macros and improving the macros, micros will improve after a lag period. The fact is, I would feel that my money needs to be protected, so I prefer my private sector banks even now.